Welcome back to Global Lens. India and UK recently concluded FTA negotiations. While this is likely to give a $6.4 billion annual economic boost to the UK, the two-way trade is likely to increase from $60 billion in 2024 to $100 billion by 2030. But irrespective of the FTA, British International Investments, UK government's development finance arm, is extremely positive on the India growth story. BII has a global portfolio of $9.2 billion. 26%, or the highest allocation of BII's investments, are for India. The institution clocked a valuation of $2.37 billion from its investments across 500 companies in India. So how does the BII, British International Investments, see India in the current geopolitical environment? And what are their big bets for 2025? I spoke to Srini Nagarajan, Managing Director and Head of Asia at British International Investments, and started by asking him about BII's current investment in India.
Let me say, I want to give you some main messages from our perspective. If you look at any growing economy, what do investors look for? There are 3-4 attributes. Number one, a stable policy environment for investing. 2, track record of having made returns on a consistent basis. 3, lesser friction in execution. And 4, availability of high quality talent. India has delivered, and it will continue to. So I don't see any reason why investors should not choose India as an investment destination. And you show me how many emerging markets we invest in them have that kind of a track record. That's the first one. The second one is, if you take a longer term view of emerging markets like India and stay the cycle, and of course time the cycle, there is terrific scope to make decent returns, for which you need few attributes again. You need to be patient. You have to be value adding on the commercial side and also on the sustainability side. And the whole objective should be to build stable organization that can stand the test of time. And that's what we believe in BII, where the companies should stand and grow beyond our exit horizon as a responsible investor. And the third and the short point I want to make here is, it's important from an investor perspective. Investors develop expertise in few sectors that go deeper, and that provides an opportunity to be an early mover and spot prospects. India offers you that luxury, and in our opinion, it remains an attractive investment destination. Let me come to BII, since you asked the question. India is around 20% of our balance sheet, and we have a long-term history having invested in the country since mid-80s. We have a total portfolio of around $2.4 billion, invested in 567 companies across India. This we split it across 3 investment verticals. One is financial services, second one is climate and infrastructure, third one is industrial technology services. And I think there are a few attributes which I want to also mention. Why do we exist as a DFI in countries like India, which is largely growing? First of all, I think the role of development financial institutions have to be differentiated as opposed to a commercial investor. What do I mean by that? We are not here to crowd out private capital. We are here to actually crowd in private capital. We have our differential pools of capital, which is growth, catalyst, kinetic, depending on the risk and the development impact metrics which is able to deliver. And we want to be the stimulant for crowding into other forms of commercial funding, given our ability to take greater levels of risks. Right. And there are numerous examples. That's exactly why we are there as an institution, is to be that stimulant and catalytic factor, which then sets a base. We are willing to take greater levels of risk for the other investors to come in later. Okay. And we are generally more product agnostic and use these products much more judiciously, where we can create the best levels of impact. And I think, as a development institution, finally, we won't deliver our mission unless we are able to deliver our impact goals, which is generally predicated on productivity, sustainability, and inclusion. And thus are measurable indicators on an ex-ante and an ex-post basis. Let me stop there.
You were a big investor in the Mahindra Group for their EV portfolio. Give us a sense of the kind of companies in the renewable space, in the electric vehicle space, that you are excited about investing in and supporting in the year 2025 and beyond.
Thank you for that. This is a very important segment for us because, as you know, India urgently requires electric vehicles to combat the severe air pollution and achieving the net zero by 2070. Part of the reason why we invested, and Indian government has set an ambitious target of 30% EV penetration by 2030. So currently the EV penetration accounts for around 6.4% of the total vehicles sold in the country. So what we are trying to do is to play a very key role in driving the EV innovation and adoption through investments. And what we are trying to do there is to fundamentally invest across the value chain. You talk about manufacturing, you talk about charging stations, you talk about battery swapping, you talk about battery recycling. So across the chain, when you invest here, I think they will definitely play a very critical role in the evolution of EV over a period of time. Well, I must say that, look, some of these businesses like charging stations, battery swapping remain a little bit subscale at this point in time. But as the evolution of EV goes up substantially, we do anticipate these businesses will build up. So we have invested around $330 million in the EV sector and will continue to invest in this particular segment. As you know, we invested in the EV arm of Mahindra. And besides that, we have made investments in Oilo Motors, Turno, Battery Smart. And I think we will continue to invest on the manufacturing side and also expand that into the component and the financing side. As you know, financing is a very important part. Otherwise, this EV segment will never grow. It's a space which will take a lot of investments, and we plan to invest across the value chain. And our ability to also take these concepts from India to the rest of the markets, emerging markets, is very high. And there's one point I want to make here, which could be a slight digression, is the interest of Indian entrepreneurs to go into countries in East Asia and vice versa, because in terms of the evolution of these markets, they're quite similar, is quite high. So the replicability of these models from one economy to the other is something what we call South-South cooperation, particularly on the EV side, is something very interesting.
All right. How are the current tariff wars that we are seeing, Srini, impacting your investment strategies? It is very uncertain. On a day-to-day basis, things are changing. How does that impact things for you?
I mean, it is slightly uncertain at this point in time. And at the end of the day, I must say that uncertainty is not good for any of the macroeconomies. The sooner this gets settled, the better it is for the emerging markets. When you look at countries in South Asia or Southeast Asia, there is a certain amount of uncertainty about this, really. But having said that, I think the global uncertainties will settle down and have to settle down. I mean, at the end of the day, we are completely committed. So when you're taking a longer term perspective of economies and you want to deliver on your fundamental objectives of being productive, sustainable, and inclusive, there is a certain trajectory you try to take in economies. For India, this means that we will continue to seek investments that have the potential to make a big difference in reducing emissions and building a more climate resilient, inclusive economy, keeping mobilization in mind. I'm not saying this is a non-issue. Yes, it's an issue. Hopefully this will get sorted pretty soon. But in the meanwhile, I think we are looking at opportunities which might be a bit more resilient to that.
Right. It's also quite clear that India will have to eventually invest a lot in building resilient supply chains, not just of semiconductors, but possibly rare earth magnets. We'll have to go into lithium processing as well, because all of these are being used as weapons. Supply chains are being weaponized all around the world, and it's creating a lot of problem for the automobile industry and the renewable industry as well, Srini. So how do you see India's efforts to invest in setting up localization? And will you be bullish, supportive of companies which want to get into that space? Because it's going to be a long-term game. It's going to be a risk, but a long-term battle.
You're totally right in that. I think this is one area where we are trying to focus, because any kind of local manufacturing in markets like India and the rest of Southeast Asia is something which is very close to our heart. And I think we have recently invested $100 million in Renew for making solar panels and cells and further backward integrating this. The whole genesis of this whole supply chain building, what we are trying to do is to try and localize and de-risk these economies. And that is extremely critical for us to build at scale over a period of time. Because if you want to build scale, you've got to integrate this. And if you're looking at the 300 to 500 gigawatts over a period of time, you won't be able to achieve it unless you're able to do this. So that's one area where we are interested in. In terms of rare earths and metals, I mean, that's a new area for us. Maybe downstreaming of these activities is something we would be interested in. And of course, on a very climate sustainable way. How can we integrate these in with a much more clean energy aspect is something we are looking at. But certainly a central focus for our shareholders who are Foreign Commonwealth and Development Office, and also us in terms of encouraging these supply chain activities.
Thank you so much, Srini Nagarajan, for joining us to share your views on the India story, what excites BII the most, and also speak about your long-term bets on India and rest of South Asia. Thanks once again for being with us.